This podcast is sponsored by Daloopa. Earnings season is hectic. There's no way around it. But what if you could take back the time you spend on manual model updates? With Daloopa, you can. Daloopa automates your audit and update process, instantly pulling accurate, fundamental data from filings and reports directly into your models. That means no more wasting hours on repetitive tasks. Instead, you can focus on analyzing trends, refining strategies, and staying ahead of the competition. Stop letting manual work slow you down. Set up a free account today by visiting daloopa.com/YAV and see how Daloopa can transform your workflow. That's Daloopa, DALOOPA.com/YAV. All right. Hello and welcome to yet another Value Podcast. I'm your host, Andrew Walker. If you like this podcast, I mean a lot if you could rate, subscribe, review wherever you're watching or listening to it. It really helps the podcast out. With me today, I'm happy to have on from SemiAnalysis, Jeremie. Jeremie, how's it going?
Hey, good, man. How's it going here?
Super excited to have you on today. I guess before we get started, a quick disclaimer: nothing on this podcast is investing advice. Please consult a financial advisor. Do your own research. That's always true. But we were talking ahead of time. Long list of companies we can talk about today. So, we might end up hitting 50 different companies today. So please remember, we're not recommending any of them. Consult a financial advisor, all that. Jeremie, super excited to have you on today. Come highly recommended. Obviously, you're over at SemiAnalysis. We started planning this podcast before the DeepSeek stuff even came out. And, this has been AI, semi, data centers, all that has been the hottest place in the market to talk about debate for the past year. Probably got even hotter and more interesting over the past 2 weeks post DeepSeek. So lots to talk about. I guess I'm going to start with this. My main interest in AI and everything, aside from how I can use it as an investor to improve and everything, my main interest is in the data centers and electrification. I know that's an area you specialize in. So we can go into different companies, different industries and everything. But I guess just broadly, if I said right now, hey, most of the investors I talk to are still on a thesis of AI equals unlimited demand for data centers, buy your nuclear energy, buy anything you can because there's going to be unlimited demand. Like, what would you think about that trend, or how are you thinking about it kind of evolving as we sit here? We're taping like February 5th, 2025.
Yeah, I mean, unlimited is a pretty strong word, right? But like I'd say at SemiAnalysis, we do have a pretty comprehensive tracker of, what we call supply and demand dynamics. Demand being basically, the idea is every time someone buys a GPU or even a CPU, whatever IT equipment, you want to put it into a data center, and there's an associated demand for power and for data center space, right? And so that's something we track very closely. So since 2024 and going forward, is very much all driven by Gen AI. So NVIDIA hardware and obviously also all the custom ASICs, AMD a little bit, but pretty much only AI accelerators. That's driving the whole market, right? And just to give some perspective, the global data center industry worldwide, let's say from 2019 to 2023, has grown at about 4 gigawatts per year, right? That's the IT capacity added per year. In 2024, NVIDIA alone, right, adds 5 gigawatts of demand, right? AI is roughly 7 to 8 gigawatts, including all the custom ASICs and all that. So it's it's just a complete change of trend. It's all driven by Gen AI, and so that's the demand side of things. And then supply, which we spend a lot of time tracking, is data centers. Basically, the question is: are people building data centers fast enough to sort of power AI and have sort of space and power where they can place their GPUs? And the answer that we forecast for 2024, 2025, and the few years beyond is no. They need to build data centers faster, right? Which means upside for the companies exposed in that supply chain.
So let me start with a basic question. And I think DeepSeek kind of highlighted this, right? I worry as an investor, and you pick your power company, Talon, Vistra, Constellation Energy, all these guys have become absolute investor darlings because of what seems to be unlimited demand, especially like a Talon with a great nuke and everything. I worry that right now, as you understand, there's an AI data rate, an AI race, and they don't have to optimize for anything because they're just trying to go, get the best model. But I worry, and DeepSeek makes me worry about this more, if we're running this out 12 months from now, right? 24, at some point you start optimizing, right? The gains get smaller and you start optimizing. And it seems to be a natural first place to optimize would be, hey, we're literally consuming like Manhattan level, like the entire city of Manhattan, we're consuming that much power in one data center. Like, how hard is it to start designing, hey, we reduce the power a little bit? And you could get into a really overbuilt scenario there, right? Like we've seen it before with fiber. Hey, data demand went straight up for 20 years. I mean, I think it was CAGRing at like 30% from 2000 to 2020. But if you built fiber in 2020, like there was a huge oversupply. And I worry we built all these data centers, to say nothing of all this new energy we're bringing online. And 12 months from now, we start optimizing and say, oh, we way overbuilt.
Yeah, that's a totally fair point. I would just start by highlighting that the sort of progress on the efficiency of inferencing AI models is tremendous, right? And everybody is freaking out about DeepSeek, but in reality, DeepSeek is not changing the trend. If anything, DeepSeek is actually below trend, right? The curve is not shifting. So what's the curve? The curve is, in 2 years, a model of the quality of, say, GPT-3, the cost to inference such a model has fallen by about 1,200, right? So it's the amount of improvement in the AI space is gigantic, right? And something we also like to highlight is everyone is freaking out about DeepSeek, but actually, if you look at other sort of competing models, Gemini 2.0 Flash, is way cheaper to inference than DeepSeek, and it's actually a better model, right? So people are freaking out about DeepSeek, but it's actually, it's nothing sort of out of the ordinary. Like they're very good, to be clear, but they're not better fundamentally than the best models of Google or OpenAI and so on and so forth, right? So that was always the case. This trend of massive improvements. Obviously, people talk about the Jevons paradox, whatever. The trend that matters here is sort of the overall scaling laws, which is that you want to have the best model, right? Like, and you've seen tremendous improvement in the capability of those models. And maybe you've tried out deep research recently, and it's getting pretty insane, right? The stuff it can do, and you've seen surely the benchmarks of like O3, like the ARC AGI-1 benchmark is pretty insane as well. Anyway, the point here is that we're going to keep building better and better models, which one means more demand for training. But to be clear, way more demand than for training. I mean, we can talk about that in more detail. So that's one aspect, and the other aspect is way more demand for inference, right? And like just a funny thing to note is DeepSeek, right? Despite all their efficiency, they actually have zero capacity to serve inference, right? They're like so constrained, right? So like two things funny to notice. One is on the training side. The DeepSeek CEO met like the number 2 of the CCP. The next day, China announced $140 billion of state subsidies. Right? I mean, it's pretty clear that DeepSeek told the guy, "Hey, I need subsidies to build more compute." Right? That's for training, and then for inference, they can't serve new users. Right? Like they have to turn down new user requests. They're in a configuration with like max batch size and like very low interactivity. Like using DeepSeek, the user interface is just not good because they have to maximize the capacity of their GPUs because they can't serve users. Right? So the trend is, even if you're building the most efficient model, like people think DeepSeek is doing, they still want way more compute, way more data centers, way more capacity overall.
Yeah, no, that all makes sense. I guess, I mean, we could just say Jarvin's paradox, every response and everything we say. I guess what I worry about is, well, let me ask you this. I'm just a generalist, right? Every time I email you or someone like you, say, hey, what do you think of this? Like, the DeepSeek news. Everybody freaks out about it. It was like 2 weeks ago. Every generalist freaks out 2 weeks ago. And every person, I'm sure, when did you first hear about like the DeepSeek and everything?
Yeah, I mean, DeepSeek actually started popping up about a month ago, right?
Yeah. So every specialist, I would say, like knows the news 2 months before it filters through the generalist. So like, if I were to talk to you and be like, hey, are you at all worried about scaling laws at this point? Or like, what is on your mind as a worry for the whole AI trade at this point?
Yeah, I just think, so like the way we think about that, we kind of split it in 2 phases. One is training and the other one is inference, right?
Yep.
So if you think about training alone, we still see that over the, let's say, next 2 years, all the big AI labs have massive plans. I think a nice way to visualize that is, today the largest clusters, GPU clusters, are about 100,000 Hopper GPUs. which in terms of power is roughly 130 megawatts of IT power, right? And they all want to scale that massively, and they have plans for gigawatt scale data centers, even 2 gigawatt scale for a few specific sites, towards sort of, let's say, 2027, right? So in 2 years, maybe 2.5 years, they want to scale their biggest cluster single site from 100,000 GPUs, 130 megawatts to the gigawatt scale. So there's massive scaling. That's training alone, right? However, we're talking about tens of billions of dollars in capex, which they partially have the funds to finance at this point. But what's going to happen as well is at some point they're going to have to face some adoption of the underlying technology, some inference revenues. Yeah.
Can I pause you right there and ask a really stupid question, really stupid generalist question? Training, you mentioned we're scaling from people right now. If it's 1,000 unit clusters, they're going to 100,000 unit clusters or whatever it is, right? I've always wondered, like, you also hear, hey, we're kind of at the end of the amount of data that we have to give these models to start training on, right? So if I told you that, like, why do we need to go from 10,000 to 1,000,000 or 100,000 or whatever it is when, like, yes, there's always more data, like the world generates more data. Yeah, we can go get some books from the 1500s, but like most of the data has already been input into it. Like most of the internet is in these training models. Why do we need to go from 10,000 to 100,000 when it seems like the amount of more data we can put into these models is actually like getting kind of smaller? Does that question make sense?
Yeah, and the answer is exactly because there's not enough real data. So we actually have to use a ton of compute to generate synthetic data, right?
So it's just, so when I go from 10,000 to 100,000, like the answer is, hey, we're generating these synthetic data and using that to train it up. It's the extra 90,000 or whatever is just for extra synthetic data.
Yes and no. Synthetic data is a good portion. Techniques to sort of add more sort of reasoning capabilities are also in other areas, which is like reinforcement learning, which uses a lot of synthetic data. And another one, it's a pretty interesting, but like the pre-training scaling loss, which is building a model with more parameters and more data. One of the issues with the pre-training scaling loss is at some point the models are too expensive to inference, but you can actually use those huge models to fine-tune the smaller models and make the smaller models much better, right? Which is a technique that all the AI labs have used. That's how they came up with like GPT-4o or Claude 3.5 Sonnet by using sort of those techniques. So yeah.
Super stupid generalist question, but this is why I have experts on, so I can ask super generalist questions. And like, look, I read about this stuff, but you read about it all day, and I read about a lot of other stuff, so I won't feel bad being dumb. If you start having models that are running more and more on synthetic data, right, instead of real world data, like, don't you have a risk where the synthetic data just starts, and I understand they have checks and everything, but you can't check everything in a model. And don't you have a risk that somehow you've got, like, if it's 90% synthetic data and 10% real data, all of a sudden you've got models that believe the sky is red or the ocean is green or something? Like, why isn't that a risk? And those would be obvious things to correct, but we're all familiar with what is the phantom answer, where I ask Google, like, hey, what was Apple's big product launch in 1942? And it says, oh, Apple's big product launch, they were really excited to launch the catapult that year. And you're like, where did that come from? And no one can point to it. So don't you have an increasing risk of like hidden phantom answers if it's all running off synthetic data?
Hey, Andrew, the simple answer is scaling loss again, right? You just need to spend more compute to have better checks, right? To have the synthetic data be of, simply a better quality, right?
Let me ask another question on data. So most of the data right now is stuff that is online, right? Do you have a rush for, I think about Tesla's having the cameras all around it, and them always saying, hey, our key to self-driving is we've got, at this point, 10 years of every car is equipped with this. We've got 10 years of data, and obviously Waymo is going to get that very quickly and stuff. Do you have a rush to generate more data tokens where you're just like, hey, I'm Facebook. I'm going to, Google's got the cars driving around everywhere. F that. I'm going to put a camera on every single corner and in every single building that will let me, just so I have video of everything that's happening in the world. And that is one, video, audio, all of that. And that is one way to generate like enormous amounts of extra data, right? Would that be a thing?
I mean, you could argue that using platforms like ChatGPT or Claude or whatever is, when you do that, you kind of contribute to, providing more data to those companies, right? Because every time you have an interaction, it's stored on their servers. So yeah, having like that's one way to think about that, is having a platform with many users is actually very valuable, because it does generate much.
No, I get that. Like, one of the arguments for Facebook is they've got all this private data with the interactions, the DMs, what you like on Instagram. They've got more data on you than anyone. And that's great for their advertising. But I guess I was more talking about bringing it into the real world. And you have like, I could imagine a world where ChatGPT says, we really need a lot of like real-time physical data. So we're going to go out and go to every building owner we can say, hey, we'll pay you $1,000 per month if you will let us record everything and get that audio and video. And then we can use that as data, right? In some way, shape, or form.
So there's one step before that, which is actually starting to use all the video data that's out there, which we don't really currently, right?
Like the YouTube data and stuff?
Yeah, that's right. All the movies, all the YouTube, we actually don't use the data. We use like transcripts and stuff like that, but we don't actually use the video data itself, which, either like just using all of YouTube would be orders of magnitude more data than what people use using Ethernet data, right? Like Common Crawl or stuff like that. So that would be the first step, right? First, we have to use the existing video data, which is, massively.
I mean, you think about those YouTube stores, and one thing I love about YouTube is, you and I have such different YouTubes, and you'd never even realize it. But I mean, I don't even know. There's millions and millions of hours of video uploaded to YouTube every day. And as you're saying, it's not recorded, though I'd also argue, hey, if you start analyzing like 1,000 Mr. Beast videos for data, yes, that's interesting, but it's very different than like me sitting in my closet shoebox interviewing you, or like me, petting my dog on the street or something. It's a very skewed view of the world.
Well, yeah, I mean, imagine all those great podcasts that YouTube could train on, that the model could train on, right? Like, it would learn a lot of stuff, right? Definitely on, like, specifically on investing or whatever, right? But there's just like, just a ton of data out there on the video. Again, orders of magnitude more than what exists on the text format. So, before your scenario of paying people to generate data, there's a multi-years of video data that we are yet to uncover.
I want to ask about some more data center questions, but I guess let me just completely switch gears and ask you a question. There was a very popular, Matt Levine called it the most market-moving short report ever, the short report on NVIDIA that came out like the weekend of DeepSeek, and people think it's partly the reason NVIDIA stopped, opened down, what was it, like 10 or 15% or whatever, lost 600 billion of market cap. There was a very popular thing. And the basics of it was, look, NVIDIA has had great success, but success attracts competitors, and for X, Y, and Z reasons, NVIDIA is their future is not as bright as the stock market's giving it. And like, one reason was, hey, all these tech giant hyperscalers that they sell into, Amazon, Apple, Google, all of them are trying to build NVIDIA competitors. We're not sure if, as we go from training to inference, we're not sure if NVIDIA has that big of an advantage over their competitors. And you can list X, Y, Z reasons. I'd love to just ask you, because it's buzzy. Everyone wonders, what are your thoughts on kind of NVIDIA as we sit here?
Okay. Hey, so let me just say that to answer that question, I'm in a, I want to say, privileged position, because I'm part of the SemiAnalysis team, where we're 23 people, a lot of technical backgrounds, very different backgrounds as well, and we have like an AI engineer on board who knows everything about model architectures. We have networking experts, and so on and so forth, right? So we actually answered those questions with sort of a very technologically informed point of view. Right, and basically what we see, analyzing the engineering of all those systems, and comparing to what the common market narratives, I would argue that NVIDIA's engineering talent tends to be underappreciated. Right, so people know that NVIDIA is a great hardware designer. Right, that's not a secret for anyone. People, I think, increasingly understand that they have a great software moat, although there's this discussion of whether the software moat applies to inference or not. There's the third one, which I think is less often discussed, is the networking aspect. Right, and so that's a position that SemiAnalysis has taken, which is that we think NVIDIA's moat might actually be stronger on inference compared to training, because even if the software aspect, we agree with the sort of market position, the software aspect is less important than it is for training. What is more important is everything related to networking, especially the scale-up network. right? And you have to think about the engineering prowess that is building the NVIDIA GB200 NVL72. Where you have those 72 GPUs interconnected in an all-to-all configurations with NVLink at an incredible bandwidth, which is unmatched by any hyperscaler. So incredible bandwidth. And you have like 3,000 or 4,000 copper cables. If you look at the rack scale solution, like it's pretty insane what they're doing. And this is state of the art, right? No one else has as good of a solution, and that's a huge moat for inference, right? So which means that as we go into more and more reasoning models, especially as reasoning models have sort of a longer context window, they need more memory. To scale memory, you need that scale-up network, and that scale-up network is one of NVIDIA's prowesses.
This podcast is sponsored by Daloopa. Earnings season is hectic. There's no way around it. But what if you could take back the time you spend on manual model updates? With Daloopa, you can. Daloopa automates your audit and update process, instantly pulling accurate, fundamental data from filings and reports directly into your models. That means no more wasting hours on repetitive tasks. Instead, you can focus on analyzing trends, refining strategies, and staying ahead of the competition. Stop letting manual work slow you down. Set up a free account today by visiting daloopa.com/YAV and see how Daloopa can transform your workflow. That's Daloopa, DALOOPA.com/YAV. Let me just pause there because NVIDIA, it is. I have no view on the stock. Okay, so I will be honest there. It seems like great, they're growing rapidly, but you do run into hey, it is priced pretty richly, and semiconductors overall are very cyclical. And I guess one of the things that the bear case was pointing out is hey, nobody's doubting NVIDIA is a great company. It's just it is priced so richly for what ultimately every semiconductor has a cycle at some point, right? They will have a cycle at some point. And I guess the second thing is A, the cycle, but B, look, Microsoft, Amazon, Apple, these guys are not stupid. NVIDIA is getting huge margins. And why couldn't they recreate the NVIDIA, 90% of the performance? Why do they need 100% of state-of-the-art performance all the time for all the AI models? Why can't it be 90%? Or, hey, if I gave Microsoft engineers, the NVIDIA stuff from a year ago, couldn't they recreate it within 6 months? I don't know. Why isn't Microsoft creating their own stuff 18 months behind NVIDIA for 50% of their CapEx, and then the other 50% goes to NVIDIA state-of-the-art? Why isn't that a reasonable thing? So I threw a lot out there. I'm talking hypothetical worlds and weird stuff, but I guess the underlying crux is NVIDIA, nobody's done the moat, but it's quite priced quite richly. And you say that, I'm why can't there be worlds where it's yes, but?
Okay. It's always yes, but right to start with.
That's why investing's hard. And I think 2 years ago, my friend Bern Hobart from the Diff said, the way you'll know AI is here is when NVIDIA stock just starts going up and all your smartest friends who are into AI are buying calls. And I think of you guys all the time because I think it was Doug who was unlimited power demand, just buy them. But I'm at some point, where does it end? Where's the limit?
Yeah, first of all, I would just say, I used to be a buy-side guy. Where you can invest however you want, but I'd say generally you want to be with the cycle, right? And if it's an up cycle, stuff's going to go up, and if it's a down cycle, it's going to go down. But
why words have never been spoken on this podcast?
It's kind of as simple as that. And generally, even if it's a strong up cycle, even if it's richly valued, right? Nobody cares. It's just it just goes up because the earnings keep getting revised up. Right, and so that's why we have generally a positive stance on NVIDIA, and typically a lot of other AI-related stocks, including power stuff. It's just because who cares about valuation? Because actually the earnings are going to rise so much, right, and much more than what consensus expects, right. And I would briefly talk about hyperscaler capex. Right,
yeah.
You've seen Google's capex, you've seen Meta's capex, Microsoft. They haven't given a full year guidance, but I think at the end of calendar 2025, if we look back at what people project right now and what they actually did, I think it's the same answer. Capex is going up massively. It keeps beating estimates. Not by 5%, by 20%, right, or 30%, and that's how we see the trend playing out in this upcycle. Is very, very strong upwards revisions, right, in what people are spending. So that's the first thing. Upcycle. The upcycle is strong. There will be a down cycle.
If I was like, nobody's got a crystal ball, but I was like, when does the down cycle start? Because I do think there were some people who thought like Project Stargate comes out. That's the 500 billion Masa Oracle Trump. And I remember a lot of people were like, oh, it is on. Like everything's going straight up. Demand, like buy anything. This is your license to buy anything, because it was just a huge check and a silly number. And then DeepSeek came out and a lot of people got worried like it's, it's never been more over. And I guess my two questions for you. Let's start with the first one. When DeepSeek came out, a lot of people were saying it's over. And one thing I noted was like DeepSeek came out maybe to the public 24 or 48 hours after the Satya, hey, I'm good for my $80 billion check, and Mark Zuckerberg kind of talking about 50 billion plus or whatever in CapEx. I would imagine they knew DeepSeek and they were committing to this amount of CapEx before that because they continued to see like upside. Would you agree or disagree with that?
I fully agree, because as I just said, models like Gemini for 2.0 Flash are actually better and cheaper than DeepSeek. So for them, it's not a change of trend. It might be a margin impact because they want to charge their API prices for the state-of-the-art models like very, very high at high margins. But overall, it's not a change of trend, right?
You said when we were talking just a few seconds ago, you said we're in an upcycle, numbers going up, you can buy them all while the numbers are going up, right? Very pod cycle. I love the mentality, but what breaks that? Like what would break that?
Yeah, I know. I mean, great question, right? I think a couple of things could break that. First of all, I think it's very important to carefully track the adoption of AI, right? You can do silly stuff like looking at website visits of ChatGPT and Gemini and Claude, whatever. You can also use whatever tool you can to sort of track OpenAI revenue, and maybe Claude's revenue. I think the overall adoption obviously matters. I also think the reason this has taken such proportions is because we've actually seen somehow the ROI, right? Because the way I think about it is hyperscalers, they build their businesses on users first, right? Not revenue first. You've had acquisitions like, I think in 2007, YouTube, or maybe 08, whatever, acquisitions like YouTube, where people were like, hey, this is way overpriced. YouTube has no revenue. But in Google's mind, it's all about, this is a great platform. They have great users. I want to have the users, and I will build a revenue model after I have the user. I'll figure it out, right? WhatsApp, same story. You could argue it's maybe less successful, but Instagram is like extremely successful. Obviously, anyway, that's the idea is, hyperscalers are user first and revenue second, right? It turned out to work pretty well for them, right? Didn't it? So now, if you apply that logic to Gen AI, it doesn't perfectly, because Gen AI is sort of more capital intensive. But in terms of users, what ChatGPT demonstrated is 200 million users in what was that, like 2 months, something like that. So I think it's pretty clear that Gen AI has the capability to be sort of the next billion user plus platform. That's why everybody's in such a rush, because a billion user plus platform means tens of billions of dollars in potential revenue, maybe even hundreds of billions of dollars. So yeah, that's one thing, is the consumer adoption is like extremely strong for those tools. So I think that's just having the users, the hundreds of millions of users, was enough to get to the level of spending that we're at right now. However, what we forecast is going to happen in the next 2 years. And to be clear, there's meaningful physical evidence of that, especially on the data center stuff. Again, they're building huge gigawatt scale data centers, many gigawatt scale data centers for AI only. And at some point, to justify those investments, you're going to need more than just the users. You're going to need, obviously, revenue. So again, I think tracking whatever indicator you can to understand the adoption of these tools is crucial. And if people stop using ChatGPT, or if actually they struggle to sell those $20 a month or $200 a month subscriptions, I think at some point that's just going to be like too much for the market, right?
I do. You just mentioned this at the end. It is funny. So I just paid for my first chat GPT subscription because I was like, A, I'm starting to use it more, and B, I just need to commit. Like, I think if you are a professional in just about any intellectual field, which is investing in intellectual fields, sometimes I say yes, sometimes I say no. I don't know, but I think if you're not using it constantly, then you're probably falling behind pretty rapidly and thinking of new ways. But I do wonder, like, is subscription the way that you ultimately pay for these things? Just because Bloomberg, yes, but that is more like networking tool. Most of these tools, Google search, most of these tools you end up monetizing on advertisements. Like, I'd be kind of surprised if subscriptions is the way they all ultimately monetize, especially if, as we were talking about earlier, data is the way that you get better at these. Like, one way to generate proprietary data is have more searches, more uses going through you, more API requests. And how do you get the most searches? Make your product free, and then make your product free and monetize it over ads. I don't know if you want to say anything there. I've got some more questions to go there.
Yeah, I would just say that I think the models that the business models that people are exploring right now is basically having a free model with decent capabilities, right? Which is GPT 4.0 mini, which is Gemini 2.0 Flash, and those sort of free models, they're going to see their capability increase. But obviously, you're going to have just that free version as a sort of advertisement tool, as a massive user tool, right? Again, hundreds of millions, not billions of users. And then on top of that, like you see the capability, and then you can sell all kinds of extra stuff. Let's see how they figure it out. Advertising could definitely be part of it.
As someone who's got your finger more on the pulse than this, than probably 99.9% of the population, my listener base, everything, what AI tool do you use the most?
I like Gemini.
You like Gemini? Okay. Let me switch gears. Okay.
Have you tried deep research? It's actually pretty incredible. Like, if you want to do a quick stock initiation report, it's actually fairly decent. There are like some pretty good prompts to do initiation.
I haven't, but I will tell you, one of the reasons I paid for ChatGPT is over the past couple of weeks I was researching stuff, and I started playing around with the prompts I put in ChatGPT and using the reasoning on it. And some of the outputs I got were like, it would have taken me a month to put it together, and it was really incredible. So I was like, all right, this is just, I've got to use it. As an investor, this is me personally. Obviously, there are people who are making their fortunes in semis or, buy Microsoft Meta and just go to a beach or something. For me personally, the two areas that I think are most interesting are power. And you could divert that into, the talent, the actual power producers. You could divert that into, hey, are we going to have, as this demand goes up, we have to fund it somehow. Nuclear, nat gas, even coal, all of those are interesting on one side, the power. And the other place is the data centers. So, but like this rush for data centers, and we're going to come to the Bitcoin miners in particular, what in my mind. But let's start power. As we talk about it, we talked earlier about this demand for power, all this getting built. I guess when you think about that power, like, what do you think are kind of, I know you guys focus on semis, but you guys also know the power split, the power demand. What do you think are the most interesting kind of power plays? Is it what everybody likes to do and just go buy the power producers? Or do you think, hey, we've got this, it's such a crutch, we need so much more power, like actually the underlying commodities, nat gas, we need more of this, coal retirements, forget it, we can't retire these coal plants. Like, how do you guys kind of think about playing that?
Yeah, I mean, something that I personally look at a lot is the data center infrastructure stuff, right? Which is, I would argue, it's a pretty good proxy for, again, like GPU demand, especially because it's a CapEx-driven type of business model. But so everything related to electrical equipment, cooling equipment, there are a lot of companies in there. There's obviously big ones like Schneider, Eaton, and Vertiv.
Vertiv is what I was going to say, yep.
Yeah. There are, if you want to be creative, you can look at the Taiwan stock market, right? There are some liquid cooling stocks, pretty high exposure to liquid cooling, so interesting plays over there. And there are some smaller, small to mid caps exposed in maybe MEP engineering for data centers, maybe cooling towers for data centers. There's a whole pretty big supply chain. And the thing is, those pieces of equipment, they're they're overall commodities, right? They don't have the level of product differentiation that NVIDIA has with its GPUs, for example. So even if like Schneider dominates the electrical and cooling market and Vertiv and Eaton, there's actually room for smaller folks to play in sort of more local ecosystems. So, everyone can sort of benefit in that area. I mean, that's one, because I personally look a lot at equipment, but you're right by saying also the power producers and overall nat gas.
Yeah, look, that's perfect. Let me ask the one I've thought about the most. I think from my small cap value special situation friends, I mean, yes, all of them are trying to find weird power plays and everything, but I think the one that is most popular because the stocks are so volatile and they're so interesting is the Bitcoin miners. And basically, for those who don't know, the Bitcoin miners, mining Bitcoin is similar to AI in that you take some GPUs or Bitcoin miners, you throw a lot of power through them, and you get Bitcoin. And that is a very commodity, very difficult business. But a lot of these guys woke up and they said, hey, you've got all these AI guys who are just desperate for places with cooling, with tons of power, huge places where they can put GPUs. We're Bitcoin miners. We strip those Bitcoin out. We put AI in. GPUs in, and boom, we've got an AI data center, and those things are getting valued at huge multiples. And I'll disclose, Core Scientific actually they did this right last summer, and people can go look it up. They strike a deal with CoreWeave. The stock is a 4x in a year because they go from hey, we're a crappy Bitcoin miner to hey, we are a AI data infrastructure. So I want to ask you that was Core Scientific. We can talk about their assets if you want, but there are tons of Bitcoin miners out there. And I know you know several of them well and several of them maybe less well, but I'd love to talk. I can give you specific prompts or we can go through specific ones that you're familiar with. I'd love to just talk about the Bitcoin miners as potential AI plays.
I would just like to provide a little bit of context before that and also add another complement to the previous question. I think an area that you want to look into is sort of time to power solutions, right?
Yes.
Because we said in the introduction that so in our forecast, we have an extremely granular forecast of the supply demand dynamics of the global AI and data center market. We forecast a deficit that is gonna increase in the coming years despite the data center boom, right? Which means if you want to solve the gap, you'll need time to power solutions, right? For a while, people thought the IPPs, behind the meter nuclear with the Talon type deals would be the solution. It's actually way trickier than expected. So you have to look at other solutions. And what I would add is this sort of supply-demand mismatch is creating sort of value which without that mismatch wouldn't be economically doable, right? So that obviously impacts the miner because, hey, they're crappy miners, right? They don't have the data center expertise. They might have a few folks from Digital Realty and Equinix, but they don't have the full experience of building those solutions. So in a normal environment, people would never go to those miners, especially for 500 megawatt scale, right? Because it's a huge amount of capital, right? We're talking about a $5 billion investment. But in this environment of supply-demand mismatch, the miners, which have historically been power first, right? Because it's all about finding sort of stranded power available in large quantities, extremely cheap, which is why they go to West Texas, they go to Wyoming, they go to North Dakota, and so the miners definitely have the power. They can provide time to power solutions. So suddenly, they're actually a very valuable asset to hyperscalers and other folks deploying GPUs, right?
Yeah, I've said frequently. They're clown cars that fell into a gold mine, right? They went and they built out these huge things because they all thought Bitcoin was going to 1 million, and they did it almost without regard for costs or economics or competitive analysis. And then they built them and oh no, economics have come down. And then all of a sudden there's people who are saying, hey, you've got 300 megs of power. If we want to go build that ourselves, we're not looking at it getting until 2029. We could buy your facility, throw the Bitcoin miners away, and be online in 6 months. Let's go.
Yeah, and hey, if you go back, roughly a year or maybe a bit less, remember that CoreWeave wanted to buy Core Scientific, right? Because they were I buy this guy, I get sort of a gigawatt of available power, and then I develop it myself. It's so cheap. And Core Scientific was hey, wait, man, actually,
the rumor is they offered to buy them, and then if you did the math on the contract they struck, the contract they struck was worth 2x what they offered to buy Core Scientific for. So I think there was a deal there. And I always looked at it and I was like, I don't understand what I'm missing. Like, they offered to buy Core Scientific for, I'm making up numbers, a market cap of $1 billion. And then like, we'll pay you $1 billion, or we'll sign this long-term deal that's worth, $1.8 billion in NPV. And you keep like Bitcoin miner upside and everything on your other assets. Which would you prefer? And it was like, if you had just offered 1.8, like, you might have had a deal. It was very strange.
That's exactly what happened, pretty much. But so yeah, the miners, there are a few others. Like one we've looked into are fuel cells, for example, which we can talk about later if you want. But
what was that, fuel cells?
Yeah, that's another interesting one, right? Because it's typically these kind of solutions that in the old world would be, not non-economical. I mean, so, to be clear, there are some deployments. Like especially if you think about the leader, which is Bloom Energy, it is a real business. It's not a profitable business. It's a business that tends to they have overpromised a lot, right? A lot, but today actually suddenly their solution makes sense, kind of for the same reasons than crypto miners, which is that, hey, if you can provide time to power, selling electricity at, maybe 15 cents instead of the typical 8 cents or 7 cents, whatever, it actually makes sense now if you can, shorten the timeline by 1 year or 2 years for access to power, right? So that's just another idea, which, we can talk about later, but hey, if you want to focus on the miners, let's do it.
No, I'd actually love to start with the miners. Like, look, I've looked at most of them, some of them in more depth than others. I'm sure you are the same way. You tell me a miner that you are kind of most bullish on as an AI play. If you were like as a Bitcoin miner play, I'd be like, Bitcoin mining is not a very good business, whatever. But as an AI play, one that you think will successfully kind of make the leap. I'd love to just discuss them.
Yeah. So like, I would argue it's all about how much power do you have available. And another aspect is also, how much sort of uncovered upside. Because the easy answer would be, hey, Core Scientific, but it's no.
Yeah, I was going to say put them aside because they've made the leap, and we can argue if they're undervalued or not. But they're an AI play at this point, right? So put them aside. But I don't believe any of the other ones have real AI contracts. Some have starter contracts. Some have said we've got an LI, but I don't believe a single other Bitcoin miner has a firm like 100 meg AI play. So if you choose any other one, you are kind of making somewhat of a bet that they can make that leap.
I'd say you could argue craziest one, but I think makes sense is AIRian, right? Just because they have 1.4 gigawatts secured in West Texas. Now it remains to be seen exactly how they manage that, but just by itself having that kind of power is valuable, right?
Now
the sort of downside that I see, and I think that's a trend that also valid to other folks, is I feel like just looking at earnings call, management team is kind of hesitant into how much they want to go into AI versus Bitcoin mining. It feels to me that they're still very dedicated in developing their Bitcoin mining business. I think that's the case for other folks like Riot or Marathon. They're very much into Bitcoin mining. In my personal opinion, they should go all in towards AI because it's valuations of a colocation business is way higher, right? You're talking about 15 to 20 times EBITDA for folks like Digital Realties, beyond 20 times EBITDA. We're talking about 15 years of revenue visibility, the same amount of revenue, but again, valued at 20 times EBITDA.
No, so, yeah. I'm going to earn my bones as a podcast host right here because I'm going to prove I've done the work over months. AIRian, you mentioned them. There was a Colper short report that I thought was at least very good on the economics of Bitcoin mining from, I'm looking at my notes now, from July 2024. And I think one of the issues with AIRian is, if I remember correctly, you said 1.4 gigawatts, which is a huge amount of power. The Amazon Talon deal, if I remember correctly, was for several hundred megs of power. So you're talking, you could build a Manhattan-sized AI center here. If that 1.4 gigs could get converted, it would be great. But I think one of the issues is, and you run into this a lot with the West Texas miners, all of them, in order to be allowed to build, had to sign curtailment agreements with the government. So, if the retail load is too high, then they have to shut down and kind of support the grid that way. And then B, I think a lot of the power is intermittent and, it's coming from wind and solar. And I think when you roll all those together, and this is a question I have with a lot of the Bitcoin miners who say they're going to become AI plays, I think a lot of the power is intermittent. And that is, you can't use intermittent power, whether you're getting curtailed, solar, wind, whatever it is. You can't use that for AI because the AI, it needs to be on 100% of the time. And if you kind of think about it, hey, you're going to spend $100 million a year on power, whatever it is, you're going to put $5 billion of GPUs in there. If you're offline for 5 minutes, the GPU cost overwhelms your power cost completely, right? So I threw all that, but I guess for AIRian, do you think they actually can get an AI given that power issue I talked about, or do you think they've got certain assets that can kind of overcome it?
I think generally the issue is not that hard to overcome. I mean, you probably know that most data centers in the world have backup generators, which are meant to cover episodes where you don't have grid power. So if there's a grid power failure, you'd have your backup generators to maintain power. So that's one thing. You can build a bit more sophisticated systems. Some people have started deploying, for example, on-site battery systems to also manage those peaks. Another thing also to keep in mind is when you build a data center, so it's not just about the diesel generators. There's also batteries inside data centers. In all data centers, it's part of the UPS system. So you could increase, for example, the amount of storage you have inside a data center. Typically, people have like 5 to 10 minutes of batteries, just enough time for the generators to turn on. But you could imagine going maybe a bit further if it makes sense. It might or might not make sense. If it does, you could go beyond 20 minutes, 30 minutes, whatever. Again, it's just if it makes sense. But I think overall the issue can be overcome somewhat easily.
Let me push you back in a different way. So the Core Scientific CoreWeave deal is announced, I believe it's June of 2024, which is not that long ago, right? 7 months, 8 months. The Talon Amazon deal is announced, I think it was March 2024. At this point, if you're a Bitcoin miner, you have had somewhere between 6 to 9 months to try to make the AI play. And I mean, these AI guys, you're seeing it. They are desperate for power. They're desperate for these places. And 6 to 9 months in the grand scheme of things, when you're making a company betting transition, is not huge, but at the same time, it is a long time, especially when there's kind of a gold rush. And we still haven't seen anyone but Core Scientific, to my knowledge, sign a definitive contract. Now, I think AIRian has experimented with buying GPUs and doing like a AI as a service. I think Applied has talked about doing that as well. But I guess my pushback here would be, hey, if somebody, and I actually think the AIRian assets are, on the scale of 1 being the worst assets out there and 10 being best, I think they're probably a 6 to 6.5. And I'm not an expert. So somebody could come and be like, you're too high or too low, whatever. But, for AIRian or any of these others, like TeraWulf's another one. I had the CFO on the podcast. I think their assets are somewhere between an 8 and a 9. We haven't seen them land a contract yet. And again, I know these things take time, but why haven't we seen someone land a contract if any of these were going to land a contract?
FYI, just TeraWulf did sign a contract.
I thought it was pretty small, though. I mean, I'm talking like signing a 100 meg plus contract, not the starter. Like, hey, we're getting 10 megs of like start training. And you tell me if I'm misremembering what TeraWulf signed.
I think it's 70, so it's not that small.
Oh yeah, okay, that's bigger than I thought. Yeah.
I would say the one that comes closest is Applied Digital, because they actually have a real data center. It's already built.
North Dakota, 600 megs, absolutely, yeah.
So they have 100 megawatt data center built. It's already built, right? And it's not a mining data center, so let's say real data center, which they paid for. It's roughly $10 million per megawatt, so they paid $1 billion for this data center. It's pretty much ready. They're going to need more capital to build the other data centers, which supposedly are covered by their non-binding LOI. But they recently got the capital. They got the backing by Macquarie. So I'd say Applied Digital is a credible number 2 behind Core Scientific, and I think they're likely to get their 400 megawatt deal coming through, right? So now just taking a step back. So why does Core Scientific sign the deal? Why is Applied Digital like a decent number 2? And other folks struggle. I would argue it's about technical capabilities within the team. So both Applied Digital and Core Scientific already had experience in doing a colo business, right? So before the flagship deal, Core Scientific actually signed a 16 megawatt deal with CoreWeave in Austin, Texas. Was that 2023 or early 24? I don't remember. But
it was early 24, but you are absolutely correct. Yeah.
So the point here is those guys have sort of seen this trend earlier than others. They have hired people accordingly, and they already had somewhat decent industry relationships. And when I say hired, they hired pretty senior folks at colo companies. So they just built good teams, which is in the end what matters, right? Like it's a human business. Now, if you think about folks like AIRian, right? They just need to hire the people. They just need more technical expertise. They just need to sort of probably be more focused or streamlined on what exactly they want to do. Because at least in their last earnings call, they said, "Hey, we're not sure if we want to do Bitcoin mining or if we want to do AI data center." At some point you got to choose.
Can I pause you there? Because this is the other thing that makes me smash my head against the wall. And I Doug, who's over at SemiAnalysis, him and I talked about this when some of these companies were last summer, and it makes me want to smash my head against the wall. And I'm not blaming you. I'm ranting, and I love your response because I think there's an interesting question here. Any of these guys, right? They say, "Hey, we're not sure Bitcoin mining or AI. We're not sure." And I'm like, look, if you're a Bitcoin miner, you're going to get valued at 200 megs, 100 meg, $200 a meg, $100 a meg, whatever. If you're an AI, go look at the deals that people are signing. $1,000 a meg would be low, right? And you've got this gold rush. And then I would also add on top of that, I'd say, hey, all of these guys, I've never seen share issuance like what they're doing. And, the stocks trade at 200 meg, 300 meg, whatever. And they are diluting shareholders like crazy. Now, for many of them, it's because Apply, for one, they are building out this data center. But I guess I look at the two and I say they are insiders and they are not gung-ho about the switch, nor are they protecting their equity. And then I'm an outsider saying, hey, it seems like if you made the switch, your stock would go from being worth 200 to 2,000 overnight. And instead they're diluting like crazy. And I look at all that and I say, maybe I think there's a pot of gold, but the people who should know it best don't. And maybe this is because for many of them, not all of them, but for many of them, to be fair, a lot of the Bitcoin miners came about in 2018, 2019, and they have more promotional backgrounds, to put it politely. But I look at that combo of facts and I say, Jeremie and I are out here talking about if you make that switch to AI, these stocks are going up 3x, 5x, 10x, not financial advice, just, chatting numbers and stuff. And they're out here saying 2024, some of these names we mentioned, they probably increased their diluted share count by 4x in 2024. I don't think that's an exaggeration. I threw a ton at you, but I think you can see where I'm going. They don't see the gold mine. Why are we seeing it and they don't? Are we wrong, or we do into? Because I'm sure they've had conversations with AI plays. CoreWeave, if any of these were great, CoreWeave would probably have bought them on the spot. So let me throw that to you.
Yeah, that's a fair point. I think there are obviously there are many things to discuss. I would start by something maybe controversial, whatever, but I'm sure that many folks involved in Bitcoin mining, in Bitcoin generally, I'm gonna say the word religious. They have a religious way to think about that. I don't know if that's the right word, but the laser eyes, whatever. Right?
To their credit, a few of them, and I won't say the specific names, but as recently as 6 months ago, they would have said, "We're never going to do AI. We're Bitcoin miners to the core." And then I think the AI numbers went so high, they said, "Maybe we will consider some of our assets to AI." So they are coming around to their credit, but I definitely agree with what you're saying there.
Yeah, I personally like Bitcoin, so I think they're right about several things in their overall pitch. But if you're in their mind, they see Bitcoin going to a million, as we discussed previously. So Bitcoin mining is the business to be in, especially even if
Bitcoin went from 100,000 to a million overnight, these guys would be value neutral between Bitcoin mining and switching to AI at these current prices. So it's like, hey, if we assume Bitcoin goes up 10x, why don't you just make the switch to AI and then go buy Bitcoin in your personal account, man? That would be better for everybody.
Well, yeah, I agree. But yeah, so anyway, that's one thing. The other one is, people are generally bullish on AI. That's not a secret, but there's still some skepticism. I think there's a lot of fear because, to be clear, one thing you have to keep in mind is the capital required to build an AI data center is way, way higher than what they're used to building. So the good way to think about it is capex per megawatt, which when you build a Bitcoin data center, I'm just talking about the physical infrastructure, not the hardware.
Yes, absolutely.
Where those Bitcoin data centers, they typically cost $0.5 million per megawatt.
Yep.
Right. Now, when you do an AI data center, especially when you don't have a lot of internal capabilities, so you have to outsource a lot of stuff, we're talking about $10 million plus dollars per megawatt. So it's a 20x factor, right? So that's one scary thing.
But you don't have to do it on spec, right? Like CoreWeave paid for most of the capex for Core Scientific. So if these assets were so good, I definitely hear you when you're saying, "Hey, you used to spend 500 and now you need to spend 10,000." That you got to raise a lot of capital. That's a huge switch. But if these assets were so attractive, all they have to do is go to and NVIDIA wrote a check to apply, right? NVIDIA would write a check. CoreWeave, you could find somebody to write a check and cover that capex. And I just keep looking and be like, I know it's not been forever, but why haven't we seen one other proof point yet?
But again, I would go back to sort of the industry relationships where I think Core Scientific and CoreWeave have had a partnership for several years. Core Scientific actually hosted CoreWeave Ethereum mining, a few years ago. They know each other pretty well, and I'm sure they had these internal discussions before doing that deal, where surely Core Scientific tried to negotiate with them how much amount of capital they can contribute, right? And some folks like AIRian or probably Marathon, whoever. I don't think they're really into the data center market, or maybe they're just hiring right now. They don't have the industry relationships. I personally go to a lot of industry conferences around data centers. I was at PTC, for example, a few weeks ago, which is a pretty big one. I met folks like Applied Digital, Core Scientific was there. Hut 8 is also one with a credible project. They were there too. But a lot of the newer guys, I didn't see them, right? They're pretty new to those events, so they have to just get familiarized with the overall industry, which is the work that some guys like Core Scientific have done way sooner, right? You have to, you need some credibility, you need some industry relationships.
This podcast is sponsored by Daloopa. Earnings season is hectic. There's no way around it. But what if you could take back the time you spend on manual model updates? With Daloopa, you can. Daloopa automates your audit and update process, instantly pulling accurate, fundamental data from filings and reports directly into your models. That means no more wasting hours on repetitive tasks. Instead, you can focus on analyzing trends, refining strategies, and staying ahead of the competition. Stop letting manual work slow you down. Set up a free account today by visiting daloopa.com/YAV and see how Daloopa can transform your workflow. That's Daloopa, DALOOPA.com/YAV. This was a super interesting conversation. Just if I was wrapping up the Bitcoin miner, it feels to me, and I know Applied Digital, I've done a decent bit of work there. I think I really like the North Dakota asset, but I'm not a super expert. But I've thought it sounds like you think, and you're hearing from people in the industry, you think that's a pretty solid asset.
Yeah, I think it's a pretty solid asset.
Which, I mean, look, they've done a lot of dilution, but it's pretty crazy when you start talking about a 600 meg asset that could be what it would be worth if it was 600 megs applied to AI. It's a big number. And it sounds like you like the AIRian asset. Look, let's wrap up on Bitcoin real quick. Any other miners you want to touch on or anything? We're also coming up over an hour, so I don't want to drag this on forever. But
I mean, just very shortly on AIRian, it's just a more speculative one, but they just have a lot of power. Again, I'm not sure about the sort of human aspect. If they have the human capital and the hires, but anyway, I think Hut 8 has an interesting project in Louisiana.
Which one?
Hut 8.
Yeah.
They have an interesting data center. It's 100 megawatts in 2025 in Louisiana, expandable to I think 200 by N26, something like that. Which is real stuff, right? Like they already have a solid site plan. They already have the power secured. So I think that's a pretty solid one as well.
Let me ask you a completely out of left field question, and we're coming up on time. We'll have to have you back on because this has been super interesting. I'm sure there are 100,000 questions generalist investors, everyone would love to ask you. Most of the data center activity is happening domestically, I would say, in the United States. Forget Europe, but I'm always a little surprised we're not seeing
Hey, what's
big
wrong with
data.
Europe, man?
Well,
No, it's all right.
Europe's fine, but they've got power issues. I think. So I understand why, and I understand some of the reasons I've heard for domestically, but I guess I'm a little surprised. Like, I could be wrong, I could be missing it, but I haven't seen like a Meta saying, "Hey, Qatar, natural gas is basically free there. We're going to build a kajillion megawatt plant over there and have basically free natural gas over there." I'm hitting the Middle East, but you could say the same thing. Brazil, right? Brazil's got huge energy resources. I am surprised how much domestically it's been focused on the AI data train. I'm sure I'm missing a few, but you tell me if I'm completely off there or why you think it's been so domestically focused.
You're 100% right. And I would just say time to market, the US. Okay, I think an interesting way to visualize that. If you look at where are the large-scale data centers today in the world, and let's go back in time and let's say we're in 2022, 2023. Where are the large-scale data centers in the world? Most of them are self-built by hyperscalers, US hyperscalers, and self-built hyperscale is 75 to 80% USA, right? So large-scale data centers in the US is nothing new, right? The US has the experience in building 100 megawatt scale data centers. They have the supply chains. They have a decent amount of labor. They have decent amount of grid power. The US is just actually a good place to build data centers.
They have, for now, very secure property rights. And one issue I have heard is, hey, you go build a data center, forget about the fact you're going to spend $1 billion on a hyperscaler data center. You're going to put $4 billion of GPUs in there. You spend $1 billion and then you put the $4 billion of GPUs, and then the government shows up with some machine guns and says, thanks for the $5 billion investment. We'll be taking that now. I've certainly heard that, but...
Yeah, that's a big risk, but just even even without thinking about those, like stuff like labor, for example, like, hey, you want to build in the Middle East, but actually getting like specialized labor is not that easy, right? Like low-level labor, sure, but more specialized electrical, mechanical, plumbing.
Even lower-level labor, you hear those horror stories about Qatar when they hosted the World Cup about what they had to do with labor to build out all those stadiums.
Yeah, exactly. So that just shows you that it's not as easy as it seems to go overseas. Again, the data center infrastructure has some specific requirements, and no other country in the world knows better how to build data centers than the US, right? Especially large-scale data centers. So that's a simple way. Plus, obviously, all the companies are American, right? The big AI labs, the hyperscalers, the ecosystem is American, so it's all happening in the US.
Perfect. Jeremie, this was so much fun. How can people find you if they want to get in touch, learn more?
Yeah, I mean, I have
a very underfollowed Twitter account that has almost no posting.
Very underfollowed Twitter account. I don't know, LinkedIn if you guys want, or you could just. I think the best way to sort of be introduced with what we do is to check out SemiAnalysis. The website has incredibly deep content. Other people in the team are also amazing. I think honestly the best way to reach out would be either through SemiAnalysis or just whatever, Twitter, LinkedIn, however you guys want.
Perfect. Well, Jeremie, this was a ton of fun. Honestly, the industry is developing so fast. We could do probably one of these a week and find a way to talk. But we'll probably avoid one a week. But we're gonna have to have you on for a follow-up conversation. And this was awesome. Thanks so much for coming on, and we'll chat soon.
Yeah, sounds great. Thanks for having me, Andrew. See ya.
A quick disclaimer: nothing on this podcast should be considered investment advice. Guests or the hosts may have positions in any of the stocks mentioned during this podcast. Please do your own work and consult a financial advisor. Thanks.